And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome, my futures family. It's time for the market forecast for Friday, August the 5th. My name is John Hoagland. Thanks for trusting me with your time. We've got what looks to be a very busy morning this morning, of course. As always, I'm hoping that if you are in the markets already, you've got things going your way. Pretty volatile move after that unemployment number, after those unemployment numbers came out. So we got to watch our P's and Q's, always thinking in context, risk management, and staying patient, even if you missed the move this morning. There are going to be more opportunities. Be ready. I've got my safari helmet on this morning. It's Casual Friday. Let's dive in. Economic numbers, the unemployment rate. 3.6 was expected. It was just going to remain there. It came out 3.5%. Non-farm payrolls, they were looking for an additional 250,000. They more than doubled that, 528,000. The private non-farm payrolls, they were looking for 230,000. It came out much higher than that, not double, but actually pretty close. Yeah, more than double, 471,000 private non-farm payrolls. So good news. Hourly earnings were up 0.5%. The one dark cloud on this is the participation rate. They were looking for 62.2 just to remain there, and it came out 62.1%. It doesn't really matter, I think, what the numbers came out this morning. I think the reaction to it is the only thing that was left to do. If we thought there were going to be good numbers, we were holding longs and we got stuffed. If we thought they were going to be bad numbers, we probably would have gone down anyway. I think this is offering a pretty decent opportunity for us. We're going to see this in the charts as we go on with the market forecast. Since it is Friday, I thought I would tell you that it is International Beer Day. So have yourself a beer at the end of the day today, and hopefully you'll be having a celebratory beer at the end of the session today. Stocks, Thursday was a very range-bound day in anticipation and remained that way through the extended trading hour session all the way till 7:30 when the numbers came out. Probably, of course, we've seen some pretty important economic numbers this week. This obviously is probably the most important for this week. In my humble opinion, the participation rate is going to be critical moving forward. I think there's going to be a lot of eyeballs on that participation rate. No major earnings today to really worry about. It's Friday. We've got a shorter list and some smaller companies, and really nothing important after the close today. Crude prices have reached 7-month lows. That's good news, below $90 a barrel. Apparently, there's talk of reviving the Iran nuclear deal that may lead to relieving some of the sanctions, and that's just really kind of in the wind. There's no actual progress in that, though. Anything can happen today. Remember, this is one of those days when we have to kind of watch our expectations, be patient, wait for the right move. If we go looking for trades today, there's going to be lots of opportunity to do that. Most of them probably aren't going to be that good if you are anything like me. If I go looking for trades, I get too involved, I get too busy, then I get too impatient. So I got to just stay calm, keep breathing, stay hydrated, stay fed, and look for opportunities as the day goes on. Our equities aren't even open in regular trading hours yet. We're going to be looking for opportunities in the regular trading hours. I'm just going to let this reaction settle down a little bit and then find areas that I can limit risk. That's number one today, limit risk. If you've had a good week, the last thing you want to do is blow it up on the end of the week. Don't want to do that. Try and make a little bit of money and maybe have your beer early today. VIX, last I checked, it was not really providing that much. So yeah, we had a spike in the VIX after the number came out. It's about a 4.5% jump in the volatility index, currently 2237. The dollar index is also higher, just slightly at 105.91, and the yield on the 10-year had a good spike to the upside after the employment numbers came out as well. It's up at 2.8% last I checked. As always, make sure you hit that lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the forecast. Subscribe to our YouTube channel so you can get notification when we do go live. Tuesday, we're going to be moving Make Hogue Money to YouTube. We're still going to be doing it in the Zoom meeting. If you're watching on YouTube, you won't have the opportunity to vote, but at least you'll be able to watch and see what happens. Yesterday, we knew we kind of figured it was going to be a range-bound day. We got a little too aggressive, had a couple small losses. No biggie. We'll make that up on Monday, hopefully. It's all up to you. These aren't my trades. These are your trades. So we look forward to seeing you on Monday at Make Hogue Money, either in the Zoom or on YouTube. You can see yesterday's session on YouTube now. Good morning, Charles March, first in the room. You win the prize again. Shaw, good morning. Patrick Takian, I print money. Brian, Theo. Serenity Trader, buen dia. Frederico, Dark Kevin, I hope things are going well for you, Dark Kevin. I know you look like you're ready to go today. DA, good morning and happy Friday to you. Josh, big spike this morning. Tachyon down 100 for practice yesterday. Another day, another new challenge. Of course, every day is a new challenge here. Orion, good to see you. Scott saw and he conquered. Bill Phillips, Marcelo, good morning. Denise, my brother Rick, love you. Mango Heist. Brody, Sarah Hall, good morning. Prayers and love to you as well. Zerain, Michael, Rusty Golfer, Jules, Terry King, Phil, Randall. Woohoo! Sarah's already got a beer going there. Georg Duque, good to see you. ZK, Dario, good morning. Ron Hegel Matters, good morning. Steve C, good morning. Smash the sell on the 528 number. Wow, good when it works. There was no ripsaw. Well, I'm glad it worked for you. You hit the right button, it sounds like there. Yeah, we got some pretty decent downside off of that, right? Dan Trader, good morning. Jordan and Dimitar. If this is your first trip to the market forecast, welcome. My only goal is to try and put some sort of accurate context into the marketplace. I'll always remind you to be good risk managers. It's all about the risk. It's all about the small risk, the big reward, the asymmetric opportunity. That's why I'm here, and that's why we're here. Just getting notification that Mom is watching. So, hello, Mom. Say hello to my mom. Jan R., good morning. And I'm going to try and remain patient. I know I sound a little bit amped up. I'm just kind of settling down. When I get these big market moves, everybody gets real excited, and I find that if I remain calm and patient, I do a much better job of being a good trader that day. Always be thinking about keeping your smart trader in the front of your mind. If you find you're reacting, if you find you're doing things impulsively, check where that is coming from. Impulse usually comes from fear. Impulse usually comes from anger. If you're getting angry, step away, let go of that venom, be patient, look for the right opportunity. All right. Everybody's saying hi, Mom. Everybody's saying hi, Mom. Hi, Mom. Mwah. I love you. Ma, we're going to go into the charts now. This is I know this isn't your favorite part, but this is the important stuff. All right. Sorry about that. I ended the stream for a second there. Hopefully it comes right back on. Looks like we're all right. Let's try that again. Going into the S&P daily chart. All right. Looks like we're good. Okay, so we've come a long way in a short period of time. It doesn't surprise me that whatever the unemployment numbers came out, we were looking for some sort of a pullback. We had a breakout yesterday. We're still, in this area of previous balance. We're stuck in there now. The Nasdaq, however, is not. The Nasdaq, however, is not. It's much higher above that. So we've got a little bit more work to do here in the S&Ps. This move back to the downside, I don't think has really changed much as far as the upside in the upside structure. We've had some little weaknesses in this area that we seem to be coming down to try and check. We've got the 100-session moving average on the daily chart coming right to where we are right now, which may be somehow impactful on the day today. We're getting near the low end of this area of balance. We're approaching the low end of this area of balance that we're currently in. Yesterday, the attempted move to the upside on a very range-bound day, we lost 12,000 in open interest. That doesn't necessarily concern me as an end of the upside auction, because there was a lot of posturing and positioning and hedging yesterday on the expectation of some volatility here today. Early, we had an inside extended trading hour range. It's all about the release today and where this market is likely to head. Okay, so here's our overnight. We didn't have any overnight inventory. You can make an assumption that if this is shorter time frame, weaker hands traders, that we're getting a little bit short in the hole here. My interest is when the regular trading hours open and what the longer, bigger traders are going to do. Are they going to unravel some strategies? Are they going to get back into some hedges, out of some hedges? Going to be watching very carefully. This naked point of control right here has been sticky here for the last 10, 15 minutes. We've got another naked point of control down there with which to look for, and then we've got a whole bunch of space till we get to weekly kickoff low and another naked point of control. I'm not expecting anything of that kind of magnitude on this move, because actually the news was actually good news. So we're opening with a gap. If we can't close the gap relatively early, a subjective term, we'll start to look for opportunities in the direction of the gap. But we've got the low end of our balance area here. The upper end of the balance area yesterday was actually supportive somewhat for activity yesterday. So we're going to be looking to see if we can't find some sort of base to put in early in the session to perhaps look for opportunities to buy this market on weakness. We've had some time here to even out inventory, more time to even out inventory. It's not until we start to get below this naked point of control where I'm going to start to worry about more downside in this market. Anything can happen, of course. Anything can happen. We got the dollar index. Yeah, up a full percent now. Interesting. Looking at the quote board I have here, the only thing that's up on this quote board is Bitcoin. Now we've got the dollar index up as well. So actually, anything can happen. I'm probably not going to get too involved until I can start to recognize some sort of structure. Now, that's probably going to cost me in trade location, but at least I'll have some idea of where price has to go to prove a trade wrong. I'm going to watch after the U.S. market opens. Opening range trade might be something interesting if it's not too big. I'm going to have to make that decision when we get there. So it looks like we're going to try and revisit this naked point of control in regular trading hours. We've got about a half an hour before we're going to get to that. Now, currently 8 o'clock. Let's take a look at crude oil and see if we can watch the opening range there. So crude oil, we had some continuation to the downside on a little bit lower volume, which is a little bit concerning. We lost 700 in open interest on this move to the downside. So without saying it, it seems as though the auction process to the downside seems to be struggling a little bit. I would be looking for higher volume and more open interest. Of course, that could somehow be related to the unemployment numbers today. We've got good momentum to the downside. We've got some of what we're looking for, and our measured move takes us all the way down to 81.50. 81.50. So I think we're going to need new business in order to continue this move to the downside. Now, there's a swing low from back in February. We're at 7-month lows here in crude oil. The February 18th swing low is 87.46. 87.46. We're already kind of getting pretty close to that level. It looks like we've maybe even checked it here. Yes, 87.31 is our current low after the open. So this swing low here from the 18th of February is going to be somewhat impactful on moves today. Okay, I think, again, we have to be looking for new business for this market to continue to the downside. It's all going to be about the volume. Take a look at the 30-minute chart here. Okay, here's yesterday's low. Here's that for 87.46 weekly swing low from back in February. Interesting spot here. Take a look at the 1 minute here. Opening range. Left the opening range at the low. It is rather substantial, 60 ticks. That's a little bit inhibitive. So when we're looking at the auction process, not building open interest on this big push to the downside is a little bit of concern. It's a B-shaped profile, which indicates long liquidation, which actually takes selling power away from the market. So selling power away from the market. Keep that in mind as you're working your way through your crude trading day today. Right. All right, good, Rick. I just saw your message. The Nasdaq. We are still in this area here in the S&Ps, in this area of consolidation. Nasdaq has gone a lot further. It's been a lot richer. It looks like it's a lot weaker today. The auction was still acting stronger yesterday. We had an overlapping to higher range in the Nasdaq, and it still added 2,000 in open interest. So it's looking like we are getting a little bit too long for our own good here in the Nasdaq, because we're a lot closer to weekly kickoff high than we are in the S&Ps. We've come a lot further. We've attracted a lot more new longs. Here's the 30-minute chart. Okay, look at where this naked point of control is. This is that same naked point of control that we are currently at in the S&Ps. A lot more space down below that. Look at where we've put in our low here, value low from 2 days ago. This may end up putting in some sort of structure that we're going to be able to lean on. All I'm looking for is structure that I can lean on to limit risk. I'm not depending on wins or losses. I'm depending on finding areas that I can limit risk, and this might end up being one of them. We got to see how the opening goes and how the longer, stronger, bigger participants treat this market as it opens up. It's okay to try and remain patient. It's okay if you miss the first opportunity that you see today. There will be more. Just stay patient. Let them come to you. Here's gold. Get a little whack in the gold here this morning. I was a little bit excited that we were going to see some continuation to the upside in gold today. Of course, that has been, for the time being, squashed. We had some decent volume yesterday and adding 2,500 in open interest on a continuation to the upside into space. I was encouraged for a continuation of the upside auction. Unfortunately, that has been squashed again by the unemployment numbers. And take a look at the 30. So we didn't really have any overnight inventory. I would say it was short. The number came out, took us right back to weekly kickoff low and below weekly kickoff low. Look at this next bar. The high of this next bar is weekly kickoff. Well, I think this is weekly kickoff high, right? Weekly kickoff high, yes, 86. The high of this bar, 86. Resistance We can see this market come back down and check down to this point of control here as a matter of almost repair, revisiting a comfortable level. These naked points of control are comfy levels where a lot of activity traded. Is there any left to do there? All right. The euro still range bound. Nice move to the downside. We see the dollar moving higher, of course. Your gold and euro are going to move lower. I don't read Bitcoin very well, so let's see here. Hang on a second. So we're still really range bound. We're still really short time frame controlled in here. We added 2,500 in open interest yesterday on lower volume. You see volume kind of waffling as we continue the lower move here in volume. We see open interest up one day, down the next. We're really range bound here. We're in here for about 3-4 weeks now, and in random kind of movement. So we're looking here. I'm always looking when I'm saying that we're in short time frame control. What are the short time frame levels that have been holding? Well, yesterday's high relatively close to the value low from 3 days ago, 4 days ago. This settlement relatively close. Our low. Well, we settlement right here. There's all different reasons and areas and little nuances that shorter time frame traders find to look for opportunities. Yesterday, we had a big up move. We added open interest, but did it really matter because we're range bound? We've now taken all of that back and then some. I mean, look at how long this market got yesterday. And now look where it just took the market back to. Settlement, this little point of control down here. These range-bound short time frame controlled markets trade to short time frame levels. The problem can be there's so many of them we can get chopped up and before we find the really good one. So when we're in short time frame, think about the best trade location you can find and then see if you can get it. I don't see that there's any big change here in the euro that's occurred yet today. 10-year. So looking at it this morning, we were really in central location between last week's high and low and in central location in this channel that we have set up here. The market is it's moving higher over time. We're getting some pullbacks. Rates continue, they should be continuing higher, but we got to keep our eye on the 10-year. We do have a yield curve inversion that's, kind of telling people that we're coming into recession. A lot of argument about what recession is these days. I didn't know that it was that opinion. It was fact, and I believe we are in a recession. But the recession, the economy is not the market, right? Yesterday, slow volume, to be expected. 6,300 additional in open interest. I think that's relatively inert with the 3.5 million in open interest that the 10-year has. And we've got a knee-jerk to the downside off this. So what about all the data? What is going on? What are we looking at? Last week's low rambled through this naked point of control. We've got a gap down here to fill that does contain, it did contain a point of control that we traded to earlier this week. There's again, lots of opportunity. When the markets get this directional and I'm not in it, I got to stay patient. I've got to look for opportunities to see or witness some sort of structure establishing itself. This gap down here could be supportive. It was 2 days ago. Will it be today? I'm looking for opportunities to limit the risk. In this top of this gap could be one of those levels. I'm not going to jump into that because this market is kind of one-time framing lower. So if I do find that this is supportive, I'm going to let some daytime frame structure build there and then try and catch that structure next time it's revisited. It may cost me in trade location, but it gives me the structure I need to be able to limit risk. That's all it's about. Natural gas. Well, we see a balance forming here. We're going to be looking at range rules here. We haven't been able to do that here in the natural gas for some time. And then range rules means we buy the low of the range, we sell the high of the range against known levels until proven wrong. If we stay in this range for a period of time, we can just print money back and forth. It's a matter of staying in, getting in good trade location, and just letting the market rotate. I'm not suggesting that's what is going to happen, but now that we've established a range at the extremes, that's what I got to do. I got to fade the extreme until there's a breakout and then go with the breakout of the balance area. The 30-minute chart is going to show that we're really not near any of the extremes here. Really, the extremes are the range from 2 days ago. We're right in the middle. Do we have any overnight inventory? Maybe a little bit to the short side. This is last week's higher low. Probably not going to be that impactful right now. It's been run through so many times. So if we're looking to, buy against the low, yesterday's low might be an interesting spot. Yesterday's high, the high from the day before, low from the day before. Really looking at trying to find the extremes. I'm probably going to be looking to let the initial balance establish itself here in nat gas, and then look for opportunities on the extremes. No, right, Jack Hudkins. There's a name I haven't seen before. Seems no direction lasts for long these days, and you ain't kidding. Franklin, good morning. TFT, Jimmy Decker, it's good to see you. Steve Cannon, good to see you. Welcome. All right. So, it's Friday. The last thing I want to do is ruin a good week. I'm going to remain calm. I'm going to remain patient. I will be here pretty much all day long looking for opportunities. I know I'm going to miss a few. I know I'm going to have some opportunities, and I'm going to manage the risk very well on those opportunities. I don't want to go into some diatribe about, about how risk management is the most important thing in trading, because we all know that is true. We all know that is true. So we all, I think, have our tasks ahead of us, even if we don't participate today, and it's okay if you don't. There is something to learn. Pay attention. And have a good trading day. Ruben, hey, I could short this in the funded account. If we had money in the account, we should be able to trade these moments. Well, Ruben, stick around. There may be some things changing. We never know. Take your deep breath. Stay humble, grateful, and creative in your trading today. Hopefully it's a successful trading day. That's what we're here for. We are really looking for your success. Have a good weekend. I won't get the chance to talk to you later. So be good to yourself, be good to others. Say a prayer for peace and peace within yourself. Forgive yourself. If you get angry at something, you gotta let it go. It only affects you. It doesn't affect anything else. So stay cool, calm, and collected today. Get some rest this weekend. We've got another action-packed week next week on As the Market Turns. Get out there and profit today. I'll see you in the proverbial trading pit here very shortly. Blessings to you all. See you next week.